Hey SEC man, what's your problem, man? What's your problem? Oh man, so it's all kicking off. Bitcoin down 1.2% today, now back below $23,000, and a lot of people are starting to get worried about a major pullback to new lows. What is going on? Why are people panicking? One of the reasons is that there are rumors that the SEC want to ban crypto staking. Yes, the staking element of crypto. We had a message from Brian Armstrong. We're going to jump on over and go through that. Plus Charles Hodgkinson's response. They were all weighing in on this issue, but one thing we need to take care of is Bitcoin is tracing down right now. What does this mean? What patterns are we forming in the charts? We're going to break that down and a lot more. Smash up the likes. Don't forget to subscribe. We've got a big episode today, also including the Golden Cross. I'm finally going to put to bed this whole drama. YouTubers like, oh, look for the Golden Cross. And other YouTubers like, don't look for the Golden Cross. We're going to simplify that all for you guys so you do not get swayed by the FUD and the FOMO. Let's get straight into it, guys. And Bitcoin sitting here down, still in our purple wedge here, as you can see, and I've got the moving averages set up. Okay, so we got our 200 period moving average in this blue color. We've got our 50 moving average here in this white color. Now, if we switch to the daily chart, this is what everybody is focused on in terms of the golden cross. This is what you call a golden cross. I'm going to come into this and explain what tends to happen, and we're going to break down the stats so we're not just talking wishy-washy. Okay, but first, we got to kick off with the headline, which you guys saw in the thumbnail, and that is Brian Armstrong said the following yesterday, and you can tie this into exactly where Bitcoin dumps. I'm going to come on to that shortly. But at 11:10 p.m. yesterday, my time, he goes, we're hearing rumors that the SEC would like to get rid of crypto staking in the US for retail customers. I hope that's not the case, as I believe it would be a terrible path for the US if that was allowed to happen. Staking is really important in crypto. It allows you to participate in running a network, etc., etc. So this is a major problem, guys. Remember, if we jump back over to here, what is the SEC's concern? Well, Gary Gensler has previously stated that the cryptocurrencies that allow staking could be classified as a security. If you guys are familiar with the whole XRP case, right now, Gary Gensler is targeting everything. He's the head of the SEC. Everybody thought it would be nice, right? I even thought, hang on a second, he might be all right. He taught blockchain courses at MIT. He's pro-crypto. He has been absolutely horrible. He's been terrible. And as you can see, he's coming out and he's even said that things like Ethereum under the Howey test could be seen as a security. It goes another indicator that under the Howey test, the investing public is anticipating profits based on the efforts of others. Now, to put this into perspective, guys, the staking is huge, right? We've just had Ethereum switch across from proof of work to proof of stake. Right, we know the US is probably the biggest crypto country in the world. They have the most funds locked in, and just looking here, guys, 42 billion in the fourth quarter of 2022 was staked, okay, with rewards of 3 billion. This is not a joke, and if the SEC come after this, that's going to be a huge problem. Now, here's where things get confusing, because the sister regulator, of the SEC is known as the CFTC, the Commodity Futures Trading Commission. They actually said that Ethereum was a commodity up to now. So all this time, everybody in the Ethereum community has been very confident. It's been one of the reasons Ethereum has gone from strength to strength. It's already got its classification from the CFTC as a commodity, but now you've got the SEC proper going after it. And they started this towards the back end of last year. We started covering it off. Now, let's jump back into the tweet here, and you say regulation by enforcement doesn't work. It encourages companies to operate offshore, which is what happened with FTX. Hopefully, we can work together to publish clear rules for the industry. Fine. Somebody then asked Charles Hodgkinson, what do you think about this? And he said Ethereum staking is problematic. I need to give some context here, right? Charles Hodgkinson, ex-Ethereum, he obviously separated out to build Cardano, and naturally he's not going to be super pro-Ethereum. He obviously thinks there's weaknesses in what they're building, which is why he's building his own version. And I hold both Ethereum and I hold Cardano. Ethereum staking is problematic. Temporarily giving up your assets to someone else to have them get a return looks a lot like regulated products, okay? So this is interesting. This is coming down onto the whole Lido finance, people staking in ETH 2.0 and the consequences of that. He goes, slashing on bonds, not so good. Non-custodial liquid staking, where they don't take custody of your funds, on the other hand, is like the mining pools we've used for 13 years. We thought a lot about what makes sense for a sustainable proof-of-stake protocol that promotes control by the many instead of the few and creates a large decentralized environment. Right, let's zoom out and try to understand what is going on here, because first and foremost, staking is a critical part of cryptocurrencies. The vast majority of layer 1 solutions and blockchains built today outside of Bitcoin, Cardano, and a few others that are built on proof of work, are using a variation of proof of stake. Proof of stake is a consensus mechanism which allows the blocks to be finalized, right? It's an important part of creating the security behind that blockchain. So if suddenly now you're going to stop a whole region from being able to stake, that really does damage the security of a network. It reduces the number of validators, and therefore your blockchain becomes less centralized. So this is a major thing we need to keep an eye on, and just further evidence that the US are just complete, like the regulators over in the US are just complete morons pushing innovation away from their country just because they don't like something. And here's where things get even more interesting, guys. Look at this. For retail customers, yeah, didn't notice that, did you? Would like to get rid of crypto staking in the US for retail customers. So what about institutions? What about the big boys? Oh, they can carry on? Oh, so BlackRock and Fidelity and anybody who you're okay with, they can become the validator of Ethereum. Now, why is that important? So you can control the Ethereum blockchain. Now, I published a video going back towards the kind of September period last year where I spoke about how the ETH stake was controlled by so few. And this is an outdated graphic, but this is what I covered off in the video at the time. It was saying that, look, Lido held 31% of the stake, then Coinbase owned 15%, another unlabeled wallet 23%. So 64%, the majority of the stake is held by like 5 to 7 wallets. This has probably changed since then, but the principle will be the same. And so if you can control these people like Coinbase, like Kraken, like Binance, and get them to censor certain addresses, then you control what's going on the blockchain. No longer do we have permissionless money. No longer do we have decentralization. A huge risk for Ethereum in the proof of stake world. Just wanted to cover that off. We've done that. Let's now jump back into the chart. But before we do so, let's get a refresh on the fear and greed index. We're still in greed, 55, despite the slight downturn yesterday. Let's quickly get a check-in on the Fed rate monitor just to get a pulse. Yep, the market's still expecting 25 basis points. We got that CPI figure looming next week on the 14th. Yes, on that Valentine's Day, 14th is more important, guys. We've got to keep that CPI number in check. Make sure you tune in. We will be streaming that because I've got absolutely nothing better to do. Now back into the Bitcoin chart. Golden Cross. Let's talk Golden Cross, okay? So the Golden Cross, and we cover this for free in the TA course, ijaz.uk/TA. This is a known piece of technical analysis, nothing to do with crypto, right? This went back into the S&P and traditional finance. I used to monitor this when I was in banking. You monitor it as a gauge for long term. Now we first have to understand, and again I go through all of this, that the moving average is a lagging measure. Okay, I'm not just going to say that and not explain what it means. A lagging measure means it uses past data to print today's value. Very important. So when you see this blue and white line, which is printing right now for today's reading, it's summing up previous periods for the 50 EMA, 50 days worth, for the 200 EMA, 200 days worth of candles, and giving you the average here and printing it today. So it's using today's value on past data, hence lagging measure. Okay, so when you see a move like this, pushing straight through through the moving averages, then you can expect that they're going to cross because the momentum here is what's going to be used to calculate this value. So you know they're going to go up because these are getting higher values. Okay, so it's a lag measure, but they can historically give you moments of where the market is going to rotate. Okay, so let's go back. And you can see here, this is the opposite. This is a death cross and you saw a big move to the downside. Great. This was a golden cross, led to a decent move to the upside, but obviously this was different because we ran up to 64, we dropped down, we had a final move to the upside, driven by a bit of manipulation for people who wanted to sell their bags before we went into our eventual bear market. Let's keep going. We can study the next one, right? You can see you had a couple here. Now this is normal. This is when you get a couple in a sideways action. We're not in a sideways market right now. We are in the depths of a bear market. So getting a bull cross in the depths of a bear market is a major coup, getting a golden cross. Okay, we can't ignore it. It's a good piece of news because if you look at here, we're in a sideways market. You have a death cross, golden cross, death cross, golden cross. So this is good. But look at this one. Once it finally decided we're done with our sideways action, look at the move it had. Right? Signaled your next bull run. So it's very important. So this does not mean that every single golden cross will lead to a massive move. No. But it can suggest that there is bullish impetus. I mean, look at this one. Decent move on this one as well. From there, moving all the way up to your move to 13. But in this instance, in the last cycle, we know exactly what happened. We ran up to 20 in our bull market. We collapsed all the way down here into the 3,000. We then had a golden cross moving up to 13. Maybe, just maybe, this is where we could be. We could be in that environment where we bottomed out, where our 15,500 low is the equivalent of that 3,000 low in the last cycle. And now we're going for our golden cross and we could be having a nice decent run. Now, that doesn't mean we're in our next bull run, because this was not our next bull run. We got rejected hard at 13, and eventually, you guys saw, we had a painful year, resulting in even dips all the way down to 4,000. So I want people to understand that there is no sign that this golden cross is going to just take us to our next bull market. No. But it can give us an indication that we have bottomed out, because that was officially the bottom when you created that golden cross thereafter. 3,000, worked our way, golden cross, ran up to 13. Now the other question is, if you had a move here from 3 to 13,000, which is a huge move, by the way, more than a 4x, would you not want to partake in that? Would you just want to sit on the sidelines and not partake in that just because later on it's going to fall to 4, right? You want to take profits and then take advantage of the next move up in the next bull run. So that's an important study to do. But let's tie that in with a few actual statistics. So following a 50-200 golden cross on the daily chart, Bitcoin on average went to gain 4.4% in the following 7 days and surged 9.6% in 30 days. Okay, now if you just take Bitcoin on any given 7-day period, it normally moves 1.6% and 7.5% over any normal 30-day period in its history. Okay, so you can clearly see there is an edge where Bitcoin moves faster after a golden cross, right? 4.4% versus 1.6 and 9.6% versus 7.5. Also, the best 30-day return happened when Bitcoin surged 67% in April and May 2019. We just saw that, following a golden cross. The worst period was an 18.2% loss in May and June 2018. Okay, so very important to understand, not every golden cross is all roses and all happy. And normally it doesn't just straight away become happy. You can have down periods. I'm going to jump onto the charts to show you that as well. But if you look at the skew, where is the skew? Which bet would you rather be in? Would you rather be positioned in something which could surge 67%, or are you going to risk falling 18% to the downside? That's the kind of calculus you want to be doing. And that's the best and worst example you can see. You can look at similar analysis for ETH as well, but we'll just leave it at Bitcoin for now. Okay, so let's jump back into the charts. And you guys can see officially after yesterday's candle here, we started breaking down from our ascending broadening wedge. I covered off yesterday that this pattern can break in both directions. And as we were bouncing, everybody was getting excited. I made a video yesterday where I said exactly that this could come back down, get a retest from the backside, and have a full retracement. Now, am I concerned by a pullback here? Absolutely not. Where's the support? The support starts coming in around 21,600 down to levels at around 20,600 as well. So you got a decent amount of consolidation that occurred in January here after our first leg up. Remember, we had our first leg up, we consolidated for a while, then we had our second leg up. If we also bring out our EMA ribbon, you can see here, if I bring out the EMA ribbon here on the 4-hourly, yes, we're losing our 4-hourly EMA ribbon. But look at the daily. What's happening? We're consolidating into our daily EMA ribbon. I absolutely have no qualms, and I've said this since the price has been soaring, for this to come and test its EMA ribbon. It's healthy, it's a good consolidation. People were calling candles like this one where my cursor is a pullback. That's not a pullback unless you're trading on the hourly candles, right? On a daily perspective, this is not a pullback. It's just a red candlestick. This is a nice pullback coming into the EMA ribbon. Come down here, come into 21,000, come into 21.5. I don't see that being an issue. We've had such a phenomenal move here from the bottoms that I want to see some scaffolding being built. It gives me more confidence that we've fallen down to 21, we've consolidated there for a bit, we regrouped, the bulls regroup, and then we go for our next journey up. That's not an issue whatsoever. So I'm actually comfortable with that. Where I'm not comfortable is this. And this is where you guys need to understand the nuance. So on the daily chart, I'm comfortable with that. Where I start to get worried is if we come down without any support at that 21, 22,000 range. If we cannot show any support and we just start giving up all the gains we've had, then it becomes worrying, because what we've proven then is we've not been able to reclaim two important levels. The first one is this. Look at this pivot point here, which is when we initially, after we fell after Terra Luna, we fell down to 17,600. We worked our way all the way back here to 25,000 roughly. And we're just going to get rejected from the same level. So I do not want to see this play out. I do not want to see us get rejected by an EMA ribbon here and pushed down to the downside. That's where things can get painful. And I have to share that with you. I know it's all sunshine and rainbows and everybody's excited and the FOMO's in this market, but be very, very careful. The last few days before this slight redness we've seen have really reminded me of a crazy, crazy period of bull market hysteria. I think projects are moving crazy percentages. I mean, we spoke about Aptos on the channel with the AI. I don't think with AI in the name is just running. This is bull market mentality. These are tourists who are coming into the market looking for a quick buck. So the quicker we can flush some of those out, we'll be ready for our next leg up. So I do want to see that. In order to do that, I just want to jump back into the daily chart just to show you exactly what we need here. We need to be coming down. Let's bring back my horizontals. And I don't mind us coming down. You've got 22,000 as horizontal support as well. Remember, that's from our channel, which we'd be monitoring. And then you've got your EMA ribbon. So anything in this range, ideally 22 would be lovely. A nice retest, even if it wants to come down to, like I said, this area consolidation around that 21,000. Regroup, bounce, and work your way. If we start losing this 20 or heading towards this 20 mark, then I'm going to have to reevaluate, because then we could be in a lot more difficult position here. Okay, so we don't want to give it up all the way down past 20,000, certainly not below it. But anything in 22, 21, I'm personally comfortable. I'll look to buy the dip on some of my favorite projects, including Bitcoin, Ethereum at those levels, as we get a decent pullback. That is what I call a pullback. And again, look at altcoins. Now you're getting a proper pullback. Look at Phantom. I had people messaging me, asking me, should I be chasing this up here? No, you do not chase green candles. This ran up to a high here of 65 cents. And then people were calling this a pullback and buying on that candle. No, wait, into the EMA ribbon. I made so many videos saying, guys, it's going to pull back to the EMA ribbon. And what has it done? You're now managing to buy here at 49 cents versus chasing up at 65 cents. Huge difference. And if you do that over your investing and trading career, it's going to make a really big difference, guys. Wait for positions of strength. I know it sounds basic. You hear me say it a lot. But that is what's going to give you the advantage. When this FOMO comes in, switch your computer off, go for a walk. Everybody will tell you, oh, it's not going to pull back. It's going to be exponential. These things come back, right? These things come back. Now, it would be silly and remiss of me if I didn't speak about the wider markets, right? We need to have a quick understanding of what's going on in the wider markets. Shout out to all those affected in Turkey and Syria. Horrible, horrible. I think the death toll up to 16,000 there. Not nice at all. Thoughts and prayers to those affected. And if we jump on over here into pre-market, you can see the pre-market is a little bit buoyant, right? We've had some decent earnings from the likes of Disney and some others as well. And the Dow Jones up 0.6, you got S&P up 0.75%, and you've got the Nasdaq up more than 1%. So that's good. But you've got to understand there are jitters still in the market. Every time there's some earnings, some positive ones, the markets are happy. And sometimes there's some negative ones, markets suddenly get nervous. There's going to be a lot of that in these quarters. Like I said, Q1 and Q2, I'm expecting a lot of volatility. Next week, we've got CPI. That's going to give us some extra pain as well for us to look out for. So be very, very careful in the market. But I've decided one thing, and I said this to you towards the end of last year. I want to be in this market, which is why I don't try to time my time in the market and jump back out of the market, jump in, I'll miss the moves. So I want to be taken apart. I don't want to be one of those bears that are sitting there as Bitcoin's gone from 15,000 all the way up to 23, 24, all coins doing 100% plus and not taking part in that. What's the point of being in crypto if you're too scared to jump in when the markets are moving? If you're just going to miss every move because you're scared it's going to fall back down, right? That said, I'm not blind to seeing that price action can consolidate and come back to the downside. I've shared the weekly chart with you. Hopefully you enjoyed this video, guys. Don't forget to smash up the likes. Don't forget to subscribe. Check out this video here. Links in the description for the TA course. Got to take advantage of that. And I'll see you in the next one.